Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday the 24th of February 2021 and we're looking at what Jerome Powell had to say to Congress yesterday and what the ramifications of what he said is likely to have on the US economy and ultimately gold and silver prices. So let's take a look. Firstly, just a quick shout out to two videos produced yesterday evening. Gold rises and holds above $1,800, while silver rises above $28, but then falls back, where we highlighted that although both gold and silver have risen this week, gold has managed to stay above a key resistance level of $1,800, while silver struggled to stay above its key resistance level of $28. And has on a number of occasions now surpassed that level and then fell below it. And also, Bitcoin falls $10,000 in just 2 days. What is going on? Where many predict that Bitcoin has further to fall, but we still expect to see higher prices still later in the year, and the reasons for this. And we've placed links to both of these below. Let's get back to Jerome Powell, the chairman of the Federal Reserve Bank in the United States. Now, each month he addresses, for 2 days, congressional committees, stating his thoughts or giving his testimony, to be more accurate, and those of the Fed and the FOMC, which sets interest rates and monetary policy moving forward. Yesterday was the first day of hearings and another takes place later today. What was noticeable in yesterday's testimony in front of the US Senate Banking Committee was that he was seen pushing back on suggestions that loose monetary policy risked unleashing inflation and financial risks in what may be an emerging economic boom. He stated that the central bank would keep its attention focused on getting Americans back to work as a vaccine-related recovery proceeds. In response to questions from Republican lawmakers about whether a faster-than-expected recovery still required crisis-level assistance, he replied, quote, "Monetary policy is accommodative, and it continues to need to be accommodative. Expect us to move carefully, patiently, and with a lot of advance warning before any changes," unquote. What did appear encouraging, though, were his comments related to the fact that future updates may show the economy expanding in the range of 6% this year, and overall output conceivably returning in the next few weeks to the pre-pandemic level. The main reason given was that the rollout of COVID-19 vaccines, coupled with federal fiscal support, has bolstered household income and therefore boosted the economic outlook for the year. He did not talk, though, about the risks of rising bond yields or a possible spike in inflation, but focused on the 10 million or so jobs still missing compared to a year ago, and the need for the United States Central Bank's policy to stay wide open until that is fixed. He further confirmed that interest rates will remain low, and the Fed's $120 billion in monthly bond purchases will continue, quote, "at least at the current pace, until we make substantial further progress towards our goals, which we've not really been making," unquote. Unemployment has come down sharply after surging last year, but the official jobless rate remains at nearly double its February 2020 level, and probably understates the extent of weakness in the labour market. Likewise, consumer spending has bounced back, but the service sector remains subdued. You see, the Fed slashed interest rates to near zero last March, and is buying, as mentioned, $120 billion in government-backed bonds each month, policies aimed at fueling lending and spending. Congress and the White House have also provided support in the form of enormous spending packages, and Democrats are now pushing for another $1.9 trillion in relief for workers and businesses. Some economists have warned that inflation could take off as vaccines allow consumer activity to pick up and as the government pumps money into the economy, but Fed officials have generally played down those concerns. Mr. Powell said yesterday that inflation dynamics generally do not change on a dime, to use his words, and that if unwanted price pressures arise, the Fed has the tools to push back on them. For now, quote, the economy is a long way from our employment and inflation goals, and it's likely to take some time for substantial further progress to be achieved, unquote. So, a rather dovish tone, no doubt. But it also has to some extent at least, be balanced against any predictive rise in economic growth which he is forecasting. It's an interesting and potentially clever mixed message, committing to further or continuance of loose monetary policy, but suggesting that although he will use it as long as is necessary, it may not be necessary for as long as others may anticipate, as growth is already showing signs of development. So it's still broadly, let's be frank, a dovish policy, but he's not suggesting any further additional borrowing other than current commitments. Don't ignore that. Now, market reaction was relatively subdued, but we can see that equities were broadly in positive territory by the end of trading, though not by much, to be frank, and the dollar index was up 0.16 at 90.17. Now, gold prices, which had a good two-day run, fell back a little and closed at $1,805, above the psychologically important $1,800 level, while silver at one point hitting $28.34 fell back to $27.68, finding it difficult really to stay above $28 for very long. What was noticeable to some extent immediately after his comments was a fall in the benchmark 10-year US Treasury yield. It was down some 1.4 points at 1.3441% in afternoon trading. It had been as high as 1.389% before Jerome Powell spoke. Analysts said the market's move showed that Powell's remarks reinforced status quo expectations, that the Fed remains dovish despite some inflation concerns. Julia Coronado, president of analysis firm Macro Policy Perspectives, actually told Reuters yesterday, quote, his basic stance was the same, and it provided some reassurance to the bond market. In Powell's even-keeled way, he said, our job is far from over. We're going to be here buying treasuries for some time. Unquote. Expectations of a consumer price uptick have significantly boosted yields on longer-term US debt since the summer. Shortly before Powell's testimony, the 30-year bond yield hit 2.34%, the highest since early January 2020. And by the afternoon it was still up 2.1927%, reflecting investors' longer-term inflation expectations. Perhaps, though, and this could certainly form the basis of another video, but perhaps, though, the most notable part of his testimony was that the Fed is, quote, looking carefully at whether it should issue a digital US dollar, unquote. He told Congress that, and these are his specific words, a digital currency developed by the Fed is a high priority project for us, and that there are significant technical and policy questions related to a digital US dollar. We are committed to solving the technology problems and consulting very broadly with the public and very transparently with all interested constituencies as to whether we should do this, unquote. As the world's reserve currency, Powell stressed that the US doesn't have to be first in issuing a digital dollar, but it needs to get it right. This is an interesting announcement, and especially since Bitcoin briefly reached $1 trillion in market value at the end of last week and traded above $58,000 over the weekend, though it has since fallen back to just above $49,000, some $10,000 to $11,000 lower than its very recent high. But that issue of a digital currency will form the basis of another future video. So what are your thoughts about what was announced? How do you expect gold and silver prices to move? As a result of that, normally one would expect it to act as somewhat of a tailwind. But equities at the moment, and for the moment, appear to be the main beneficiaries of this loose credit policy. Everyone who follows this channel will know that in the medium to long term, we're still very positive, both gold and silver, and arguably silver in the shorter term than gold, for the simple reason we're expecting a major uptick in industrial demand. So it'll be interesting to see what happens when further additional economic data is announced later in the week, and what additional revelations, if any, are made by Jerome Powell in this his second day of providing testimony. Thank you so much for listening. Please share your comments, and if you haven't already done so, do subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.